What is up YouTube? My name is Aditya and welcome back to my channel, The Indian Algo. So in today's video, I'll be discussing about the complete smart money concepts. Alright, so I'll be starting off from order blocks, liquidity voids, fair value gaps, and a lot of stuff. Liquidity, there's gonna be a lot of stuff that I'll be talking about. So what I've decided is I'll be probably making a playlist of all these videos. So today, what I'll be doing is I'll be discussing order blocks, liquidity voids, and fair value gaps. All right, so these three things is something that I'll be talking about. Also, I'll be talking about rejection blocks. You guys must have not heard about this, right? Rejection blocks, never in your life, right? But yes, today we'll be discussing about, obviously these concepts are not mine. These concepts are all introduced by ICT, Inner Circle Trader. He's the god of providing all this stuff on the internet and to the retailers. Now what we need to understand is what we have already on the internet is being sold to you by a lot of SMC mentors, wannabe mentors, to be honest. These are like, it's already available on internet, and these SMC mentors are teaching this for a lot of money, right? For a lot of cost. So you don't have to simply pay them. So that's the reason what I've decided is I will make these videos for the Indian stock market, right? For the Indian stock market. So rather than paying to these guys, you can simply watch these videos and understand every bit of it, what these guys do. All right, so you don't have to be worried about it. But then again, understand this is half of what is required to make money. Obviously you need to understand that half knowledge is dangerous, right? And what ICT teaches in his course is way more than this. It's way more than this. There's a lot of stuff that you guys need to understand. So now you need to figure it out how you're supposed to get the full knowledge. Okay, so just make sure that there are probably going to be two ways. Either you go to a mentor, all right, either you go to a mentor who's already doing this stuff very nicely, or you give it to the market, right? You pay the same amount to the market in a matter of 2 years, but you'll have to spend a lot of time. But eventually you will, okay, what I'm writing doesn't make sense, but eventually you have to give the market time and money, and then you will understand what is the full concept of trading and to be successful in this type of trading. All right, so the main focus of this series is to make you understand how to trade these in the Indian stock market. Okay, so there will be a lot of stuff that we'll be discussing, and then we will proceed further with this. Great. So in this video we'll be discussing about order blocks and liquidity void. I've already discussed about order blocks in the previous video, but I'll be doing a little more detailed explanation of what order blocks are, and then I'll jump to the voids. All right, also fair value gaps. So let's start off with order blocks. All right, so I'll simply write this as order block. So I'll give you a definition like what an order: any down candle before an up candle that breaks the high of the down candle is a bullish order block. Alright guys, so any down candle before an up candle that breaks the high of the down candle is a bullish order block. So let's say we have a down candle here. Alright, so let's say we have a down candle here. Any down candle before an up candle, so let's say this is our up candle, I'll mark it as with green, and this is the high, right? Let's say it has a little wick right above this. So this candle, when this candle breaks above the high of this candle, this down candle becomes your bullish order block. All right, so the area of importance is this. So now try to understand, this is your bullish order block. So what will happen is that the prices will come back right here, and this is where in this particular range you have to look for buying opportunities. And now why is this range important is something that we are very likely to understand now. So let me just explain this to you, that why these order blocks are first firstly formed. All right, so these order blocks are nothing, it's just that this is a fake down move with real money. All right, so if this is a fake down move with real money, just try to understand, guys, these institutions have sold the prices, sold this particular stock from here. The prices move lower, 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 so their average sell price is somewhere here, right? Their average sell price is somewhere here, and when the prices are here they are in profit, but when the prices move higher they are in a loss, right? So they have to come back to this candle 50% most of the time. So they are very likely to come back to the 50% of this candle, and then from here the prices are very likely to move higher in the direction they want the market to move. All right, now the order block that you have to consider is the one that hunts any sort of liquidity. Any sort of liquidity, price hunts the order block, sorry, price hunts these lows, creates an order block, price comes back to this area and moves higher. Alright, so this is where you have to understand that. See, this is your complete Wyckoff schematic, nothing else. This is your complete Wyckoff schematic. The price falls off from here. This is somewhere your PSY. Okay, ignore, that's a different stuff, or that's a different topic. But yeah, I hope you got the gist of what an order block is. Now, yes, so why this 50%? Obviously, when I said that this is gonna be the average price, so when the price comes around this area, this is where they exit this position, this selling position, with a minimum loss or at break even. All right, so they will probably exit this at break even or with a minimum loss, so that when the prices then moves higher, this position where they bought from this area is actually in profit, which actually helps them to be profitable consistently. So they will have to repeat this process unless and until they figure out something else, but I don't think so, because this is something that's been occurring in the market for a lot of years. So there's definitely no other way to do this, because they have a lot of quantities, they have huge number of quantities, and they have to hunt liquidity, then move higher, come back, mitigate their loss, and then move higher. So that's how the market moves. So you have to keep your focus or keep all of your focus on this. Okay, so I hope your order block is clear. So this is your bullish order block. Now obviously the bearish order block is this: any up candle before a down candle that breaks the low that breaks the low of the up candle is your bearish order block. Same concept applies here as well. The price comes here, you can expect the price to move lower. The price comes here, you can expect the price to go higher. So it is probably gonna react from this level, the open of the body, the close of the body, or the 50% of the body. That's the reason we only select body of the candle, we don't select the wick of the candle. Institutions are not interested in the wicks, they are only buying and selling in the candlesticks. All right, so this is the 50%, this is this. All right, so keep your focus on these areas whenever you are looking for trades. Now let's see a different example. Let's say this is a down candle, this is the high of this candle, and this is an up candle which is looking like this, and this candle has a huge wick. Let's say the wick is this much, okay, realistic, and the high is taken out. So now, is this a bullish order block? Yes, this is a bullish order block. This is also considered as a bullish order block. All right, now if there is any simply the vice versa for the bearish order block. So this is also a bullish order block. Now what I do is I usually trade order blocks on higher time frames. I don't use it on lower time frames. I have a different way of drawing that order block, which I already had explained in the previous videos, or in the previous video of order block. Okay, so you'll probably get a better understanding there as well, but I'll try to do that in the coming videos also, when I'll show you the setups and everything. So in this series of videos, it's probably gonna be everything that a SMC mentor actually gives you out in their courses. Okay, so this is gonna be probably everything, because see, this is very basic. All this stuff is very basic, and people are selling this for a lot of money, and that's the reason people are not being able to make money. Okay, so let's understand void. So I hope order block is clear. Let's jump on to understand what a void is. So let's say we have let's say, okay, so how the prices move, right? How the prices move, let's say the price move like this: down move, up move, down, up, down, up, down, up, and then suddenly you probably see this. So this complete move is what? This complete move is your liquidity void. This is where the price created, there's no buyer on the right side, hence this is what we call a void. Now the price cannot create a void in the market, because if, see, the market created an imbalance, this void is also called as imbalance. So the market has to maintain a balance between sellers and buyers. For every seller there has to be a buyer, for every buyer there has to be a seller, right? So for every seller here there has to be a buyer. So this is the reason the prices are very likely gonna come back to this area and fill the void. This is where the prices are very likely to come back and fill the void. So you have to be very patient in understanding which void is very likely to be filled. So this is where the understanding of market structure comes into place. So this is simply a void. Alright, this is simply a void. Let's try to understand the voids on every time frame. Okay, let's have a look at voids. Let's go to HDFC Life first. Alright, so if you see this, this is where the market had created void. No buying on the right side. The prices comes around this area, falls lower again. Okay, so it did not fill the void completely, or I guess it did, because if you see, this is somewhere an order block is, alright, and the prices almost touches the order block very precisely and then falls lower. So the prices will not completely fill this. If there is an order block, it will touch the order block and fall lower. So look at the precision of this order block. This candle did not had any wick. That's the reason we simply considered the opening of the body. So price almost touched it. What is the low? 732. What is the high? High is 731.50. So just by 0.50 paisa the price missed this and then fell lower. That's completely fine. Then if you see this void, the market that has created, the price comes back and fills this. So if this is a void, the price is coming here, there must be definitely something on the right side that the prices have been, left side that the prices are touching and then moving higher. Alright, this is what we need to understand. There's a lot of stuff that we need to understand, but if you see a void is created, the price comes back. A void is created, the price comes back later, but it comes, right? So most of the time the prices will come back. Now you'll be thinking, why did the price did not come to fill this void? So this is where the understanding of market structure comes. This is where you have to simply use the logic of market structure. Now if you see, this is a simple market structure, right? So somewhere here, obviously, if you think, just see this, guys, this is your order block, right? And probably this is where I would have waited for the price to come. If it didn't touch this, I wouldn't have gone long, but I guess it simply touched this order block, hunted all the liquidity and simply moved higher. All right, so now this up move has created another imbalance, right? So the only area of interest on daily time frame, I'm talking about daily time frame, it breaks out of all these highs. So the only area of interest is this, right? This is where when the prices come, I'm going long again if the prices come here. But obviously there are multiple things. You can also short it, but try going with the trend. You're not supposed to go against the trend. Okay, now let's look at other examples. Let's go to Adani Ports. So we have another Adani Ports here. Adani Ports is pretty bullish. Okay, so let's look, just trying to understand the imbalances. We had imbalance here. The price comes lower to fill the imbalance, following the trend. The market is following the trend, right? Comes here, creates new high around this area. If you see, we have this order block right here, down candle, right? So the price dips even here, but the trend was not confirmed. The trend got confirmed, the price comes back to this area, look at the spike up, the price completely moves higher, comes here, fakes out this high, comes lower, and probably not sure. See, the it's very it's very much in a range bound area as of now, so not going with the with any of the trend in this. Let's understand Grasem. All right, so what do we have in Grasem? Again, everything that you see in the market is probably filling voids. If I zoom in, look at this candle, the price has created void, the price comes lower. All right, this is also a void, this is also a void, the price comes back and fills this void. Let's go to 4-hour time frame. Let's try to understand this on 4-hour time frame. Okay, yep, very nicely explained here. Look at this void, the price moves higher, comes back, fills the void, touches this precisely touches this order block. Okay, now this is not the order block because the institutions are not interested in wicks, they are interested in the body. So this is the candle that is the order block. Also, your order blocks are not supposed to be consecutive candles. It can be a candles like these. Okay, like there can be a gap between candles. Okay, so the high is taken out, the trend is continued, the price touches this order block right at 9:15, around 9:15 time. You can simply go long in this particular candle. All right, so then the price breaks the trend somewhere here, probably somewhere here, touches this area of order block, falls lower. So we'll talk about the trends later on, but if you see, everything is filling the void. This is where the void is created, the market comes back, fills the void. Okay, again comes back, fills the void. There's a lot of stuff that we'll have to discuss, so I'll be discussing all of that in the coming videos, and I'll make sure that you understand how to initiate a trade in the Indian stock market and also in the forex currencies. All right, now let's try to understand. So you will be using these order blocks on daily time frame, 4-hour time frame, 1-hour time frame. You don't really have to use this on 5-minute time frame. I'll be showing you a different way to use this on a 5-minute time frame. All right, so daily time frame, see, these things will eventually help you understand the most important support and resistance area, the most very important support and resistance area. So if you see this, this is an up candle, the low is taken out. All right, so the low is taken out, this is now this now becomes a bearish order block, right? So if you see, this is where the price comes, it resists. Look at the resistance that you get on the initial day. Then probably the price simply opened gap up right here, went lower, then moves higher. That's completely fine. So I'm also showing you the examples that don't work. Okay, so it's not going to be that every order block is going to work, so you just have to be very careful. Now if you feel like, okay, this order block is taken out, now the prices can simply come here, touch this order block, right? So the prices can simply come here, come back here. So let it come back here, touch this order block around this area, let it go higher. You see, what do we have? We have voids here, right? So these voids are then going to be filled. Keep an eye, guys, on this. This is very likely to do what I just explained here. If not this, then we'll see. If it breaks below, then that's completely fine. But this is what my idea is going to be to this trade. If you didn't understand, if I'm going too fast, guys, I'll have to make the I'll have to cover all the topics also, and I have to try to make sure that the video is not very long also. All right, so just make sure you go just rewind the video and just watch it. All right, so this is where you can see the price come here, dip into this order block, and then move higher to fill this void. All right, we also have liquidity here, so we'll talk about liquidity of concepts also in the coming videos. All right, so I hope voids and see, these are also voids, right? These are also voids, these are voids. This is a very nice example of void. All right, so the market is filling voids and the market is respecting the order blocks and then moving in the direction which it wants to move. All right, so I hope the order blocks is clear. Let's understand what is a fair value gap is. All right, so I don't use fair value gap as such, but yes, you can use this only on higher time frames. No 5-minute, no 1 minute, no 15, no 1 hour. Use this on monthly, weekly, daily, 4-hour, 1-hour time frames. Don't use this on any lower time frames. All right, so now let's understand what is a fair value gap. Okay, so let's say this is an up move. All right, this is an up move, so this is the wick that we have in an up move. All right, so it can be anything, so now the prices moves higher. All right, the prices moves higher, creates a wick here. All right, creates a wick here. Obviously the prices are gonna move higher from here, right? All right, and then sorry, there's another candle. There is another candle, something like this. It creates a wick here, and it creates a wick around this level. All right, so now if you look, if you try to identify, this is only buying, right? And if I ask you, what do you think these wicks are representing? These wicks are representing selling. Okay, so these wicks are representing selling. So we have to identify, so there is buying and selling both, right? There is buying and selling both, buying and selling both in the wicks, buying and selling both in the wicks, but there is no selling in this body, right? So we need to understand the area which do not have any selling. So if I mark from this wick till this wick, if you see on the left and on the right, there is no selling by any of the price action, right? So this area now becomes my fair value gap. The prices are very likely to come back here, fill the fair value gap, the sellers will come in, and then the prices can move higher. So this 50% area is very important. You have to select from this wick to this wick, and you can expect higher moves. All right, I hope this is clear, guys. I'm like, okay, so I just thought I'm taking a session, but yeah, this is how you'll have to be understanding fair value gap. Let's see if we can identify any fair value gap on the charts. On the charts, 1 second, let's do this. So this is weekly time frame. We don't have in here, we don't have, see when you see this, look, the market is not leaving behind any fair value gap. All right, so this is very important. So the market is doing something that is very important. So now if you see, this is where the wick was created, and then this was the wick that was created. Okay, so the price did not touch the 50%, but simply touch around this area and then gives a rejection. Also, yeah, very important to understand that these levels are not your support and resistance. Like I don't use fair value gap, I don't use rejection blocks. This is something that I need to share with you, just because you need to understand what is, or like what are the concepts of smart money. Okay, so you need to know everything. Also they will also not respect all the time. All right, so let's see if there's anything that actually got respected. So if you see here, even this is a fair value gap from this wick till this wick. If the price would have ever touched this area, we could have got some sort of rejection. Now if you see from this wick till this wick, we got a rejection. From this wick till this wick, you see there's no selling on the left, no selling on the left. Then the price dips, touches this 50% precisely and moves higher. Okay, so there's obviously something that is pushing the prices higher, right? Now let's see this. This is the wick, this is the wick. There is fair value gap right here. Keep it marked on the chart. Okay, we do not get any like the prices never came to this level, which is again completely fine. All right, see, this is the reason I avoid fair value gaps, and I simply focus on order blocks and liquidity voids. Now what is a rejection block? Rejection blocks, again, I don't use it much. So rejection block is simply this. Let's say we have this down candle. All right, let's say we have this down candle, and this has a huge wick. This has a huge wick. So what you have to do is, very simply, all you have to do is select this Fibonacci tool. All right, select this Fibonacci tool and mark the 50% of this wick. That's it. Mark the 50% of this wick. The prices are very likely to come back, touch this area, create rejections, and then fall back lower. Okay, so this wick, why this wick is very important? Because if you try to understand, this is where like this is an order block in itself. This is an order block in itself. If you go to a lower time frame on this wick, you will see that the price created an up candle before a down candle. All right, so it's going to be the same thing. Hence, this is the reason the price touches the 50% and move lower. So very important for you all to understand these 4 concepts. Okay, you can ignore the fair value gaps and rejection blocks, but it is very important to understand order blocks and liquidity voids because it will assist you in taking your trades. And so no matter what you are doing, just make sure that order blocks and liquidity voids is clear to you. Okay, so if you see this is a down candle, price breaks out and the prices comes lower around the 50% of this area, and the price didn't really allow it to move lower for even once. There was a close, but the price simply had to open gap up. And then when you see this is also an order block, right? So let the price come here. So you already must have understood, right? Even this is what we have, we just talked, right? Like we just analyzed this particular chart on lower time frame, and the higher time frame is telling me the same thing. This is an order block, right? This is an order block. Let the price come here till the 50% of this area, and then we'll go long to hunt this liquidity and fill the voids that we have here. Now if I go to the daily time frame, let's go to the 1 hour time frame. Let's go to the 1 hour time frame. Alright, so we were talking about the trend, right? So we were talking about the trend on the daily time frame. So the trend was very clear to us on the daily time frame that it broke around this area, So this is where I let the price come in. We again have an order block right here. Let the price touch this order block, let it dip down here, let it come back above this area. I'll get some contraction patterns, then I'll definitely take it. So you all have to understand the sustainability. That's it. Once you understand the sustainability, a lot of things are gonna be clear to you guys. Okay, so I hope you guys understood what I just spoke about. You can send me the examples on my Instagram. You can ask me if this chart is particularly right or not. I'll definitely reply to you. I'm also replying to a lot of people as of now. Alright, so yes, please take advantage of it. I'll drop the link in the description box. Also, I hope you guys like the video. So the next video will be coming very soon. Just make sure guys that you are sharing this video a lot. I hope you like, just press the like button, share this video as much as you can, and subscribe to the channel. Most importantly, I'll be explaining you each and every setup, like a complete setup of smart money concepts, and how to take trades, also how to initiate trades on 1 minute time frame. Everything I'll be explaining it everything. All right, but just make sure that this is not the end. There's a lot of things that you have to understand, and yes, just go with the flow guys. Alright, so here I end the video. Have a nice day guys, take care.